Happy Friday, and welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday at 12:30 Eastern. Happy Friday.
Happy Friday. It's been a long 2
Happy
weeks.
Friday.
It's been a lot. How are you guys
I,
doing?
I feel like is New York time just different? Like, are the days just longer here, or like
They're
how does that
longer
work? Why
and
do I feel like I've been up
faster.
for 3 weeks?
Yeah, literally. I know. You got to move to New York, Gerald. Come on. I know the DC crowd is like where it's at, especially for this show, but we have good energy up here.
You
It
guys
is
were
good
busy
energy,
this
that's for
week.
sure.
You guys were busy
Yeah.
this week. You guys were running around DAS, and I saw
Mhm.
all these crazy announcements, a serious slate of news, which we will get into today. We'll break it all down, including a new push to bring tokenized deposits to banks with Matter Labs CEO Alex Gluchowski. We'll do a deeper dive into the SEC's latest guidance on crypto transactions with Crypto Task Force Chief Counsel Taylor Lindman, who used to be at Chainlink. And I'm not sure if he's done any public interviews since he went to the SEC. So we may be his first, which is very exciting. And also, we will talk to Mason Lynaugh. He is the executive director now of Stand with Crypto. We'll get his take on the growing effort to mobilize crypto voters ahead of the midterm elections, which is scarily coming up in just a couple of months' time. But before we get into all that, let's break down the headlines of the week. And as you said, Jacqueline, there was quite a few, but let's start with number one, which broke yesterday. And it didn't really even break. It was kind of buried in a Bloomberg interview. And
Yeah.
then someone picked up on it, and then it went super viral on crypto Twitter. And that's the fact that David Sachs says his time as crypto and AI czar has come to an end. And so he's no longer the czar anymore.
He's just David Sachs again.
It's just David Sachs. Well, okay, no caveat. He is David Sachs as co-chair of the President's Council of Advisors on Science and Technology. So he has another
Right.
role inside the administration, and I think he did tweet yesterday, which I thought was really funny. He kind of retweeted Grok's take on what this means for him, and this was Grok's take on the situation. Grok said, it's a formalization of his influence. The AI and crypto czar was an informal part-time advisory title. Co-chairing PCAST gives structured leadership on AI and emerging tech policy recommendations to the president, aligning perfectly with his expertise. Sachs called the appointment an honor. And basically, Grok was answering a question someone asked, is this a demotion or a promotion from his role as crypto and AI czar? And let's roll the tape. We have his clip from the Bloomberg interview in which he was talking to Ed Ludlow, Bloomberg reporter.
I had in the first year of the Trump administration, I had a role as a SGE that was, I had 130 days. We've now used up that time. And I think moving forward as co-chair of PCAST, I can now make recommendations on not just AI, but an expanded range of technology topics. So yes, this is how I'll be involved moving forward.
Just casually mentions it. Yeah.
Yeah, so I thought this was interesting because they also formally announced the council. So that was kind of buried in this, and one of the kind of notable leave outs there was the founder of Grok, Elon, which was interesting. So
True.
no, yeah, so I think I mean from a like influence perspective, I don't think he's going anywhere. We need to talk to Patrick about who his new who he reports to now. Now that David is out of that role, but I do think the formalization of the council and the influence he can have on that is like it's not diminishing his influence from a technology policy perspective at all. It's just like a switch, and many previous administrations have had formal technology councils. And so like aligning leadership with that and having him continue to run that will be a very influential position. But it is kind of interesting to see him. Maybe this means clarity is just getting done and mission accomplished, and we can move on to AI stuff. But I'm curious to see how that plays out.
I mean, it would be nice if clarity got done, right? But I
It would be
remember
nice.
it would be nice. I remember when we were at ETH Denver, we asked Patrick Witt about this, right? Eleanor, we both asked because I asked first, and then I think we didn't get a direct answer. And so then Eleanor asked again. And to our audience and followers, you could go and catch that clip on our socials because it's a little funny.
We did. We did. And
Yeah.
I'm sure we'll be asking Patrick again at some point, to your point, Gerald, where this leaves the President's Council of Advisors on Digital Assets. I mean, Patrick has been essential to these conversations around clarity and everything going on in Congress. So will he be continuing to lead the charge? We'll have to ask him ourselves. Patrick, if you're watching, come back and give us a scoop, please.
Just a message, yeah.
Yeah, exactly.
And he's doing a phenomenal job, and we want
Yep.
to see it cross the finish line. And
Exactly.
maybe David can just go to AI, and that's fine, and we'll still get it done. Yeah.
And AI and crypto are converging so much at this point too. They're pretty much going to be. I mean, that's a
what
whole
we say,
nother.
yeah.
That's a whole nother beat at this point, because you've got the AI beat, the crypto beat, and then you've got basically both of them together too. I feel like that's just a whole other conversation.
I think it's just the meme, like, just become ungovernable. That can just be crypto and AI. Like, we're just moving along the same path where just leave us alone and we'll fix the world and it'll be fine.
Well, formally going to ask David Sachs to come on Crypto in America and discuss his year as the crypto czar as well. We'd love to have him come on and break all that down. So going to follow up on that one. But before we do, let's get to the second story, which is Tether getting an auditor. So they announced this previously, I think earlier in the week, and they did not name the auditor, but the Financial Times came out yesterday reporting that it is KPMG. And they've also brought in PwC to help prepare some of the early, documentation, I think, around it before KPMG comes in. So 2 of the big 4, I guess, are coming in to help Tether prepare and finally actually audit their USDT reserves, which is something that critics of Tether have been asking for a long time. So a big move here. And I think it had something to do with, although there's some question around this, whether it actually had an effect on Circle stock earlier in the week. I'd be curious to hear your guys' take on whether that actually was part of the 20% drop we saw on Circle stock on, I think it was Tuesday.
Yeah.
I have thoughts. Jackie, what are your thoughts?
I mean, what about Tether's audit or everything that's going on here? You go
All the
first, Joe.
things,
I'll
Jackie,
I'll
all the
chime in.
things.
I'll chime in. Let me
All right.
hold my breath.
So the Tether audit front makes sense. It's something they had to do. We actually, so Jameson over at KPMG, shout out if you're watching, is a partner on their crypto tax team. Maybe we can have him on to discuss some of this stuff. We were together earlier in the week, and I know there's a lot of momentum for those services. So as we're all becoming adults, the suits are here, and so hiring 2 of the big 4 I think makes sense. And then on the Circle piece, I think it was probably more, and I know we're going to get into this, probably more on the yields side of things that led to some weakness for them temporarily. But yeah, I mean, Tether, look, they are going to have a compliant business model. They have USAT, they have USDT. They previously did an audit of their non-US assets. And so I think this is just part of that pathway to genius compliance and like everything else you're going to need on that front.
Yeah, I think my general take on this is that it's a positive thing. A lot of people are skeptical kind of Tether's personal attestations. I can't say that word. But essentially that they're getting an auditor from PwC, KPMG, etc. It's a good thing. Like if you're getting like serious firms to do this, then like there's no way to skirt around it, is what some people have alleged. And so like it's kind of like, hey, take the report as is and let's all move on.
Mm-hmm.
It's like oh God, I have this horrible analogy. It's like, when Kim Kardashian said her butt was real and then she got the X-ray done and she's like, look, it's not fake. Except we all know it's fake. So I hope that these reports are real.
Are we comparing
it's exactly like that.
It's exactly
like that. Butt, Jacqueline? Oh my God.
But it was real. She got
you heard it here first. The X-rays are real.
Yeah.
The X-rays are real. All right, Ellie, take us to Circle.
We should point out too that USAT also did an audit recently on its reserves, and I believe they used Deloitte for that.
There we
So
go.
another of the
Yeah.
big four.
Just
So
all the big four firms are getting a turn.
yeah, I know. Who's the one we're missing now? So it's out of the it's PwC, Deloitte,
It's
KPMG,
Accenture. Accenture.
Accenture. Okay.
Okay.
Or
Gotcha.
yeah, or EY.
Sorry,
Yeah,
Accenture.
yeah.
Oh
You
no,
can,
EY. It's
yeah.
EY.
Yeah, come on, Jackie.
All
Let's
right,
go.
maybe they'll come
The
around
other
at some
X-ray
point.
office. Yeah.
Okay, moving on to Circle. So they had a bit of a rough week, especially a start to the week. Their shares were down about 20% on Tuesday, and we think it was a mix between, well, traders think it was a mix between the Tether audit and also, to Gerald's point, maybe a little bit more to do with the yield news. So this is a live chart, I think. Is that right now? Oh no, that's 5-day. Apologies. So that's wow. So they're down. That's
They're
right.
down.
They're down.
Yeah.
They're down today. So down 6% today, down 25% on the week. So yeah, so they're having a rough week. But the yield news, right? The Clarity Act is still not, I don't know if it's anywhere close to being done at this point. I mean, they said they had a yield deal. Some parties are not happy with it. And that so some clues came out earlier in the week as to what that deal might look like, including the fact that there's going to be no yield allowed on idle balances. There's some question as to what this might mean for Circle and Coinbase's revenue sharing model. Gerald, take it away because I know you have thoughts on this.
Yeah, so if you're paying attention on the Coinbase Circle side, I mean, there's a very specific reason that Brian Armstrong was as vocal as he was in killing that earlier draft. Circle does, I think, I don't fact check me on the number. I think it's about like 1.4 billion that they get from Circle on the passive yield staked USDC model that they do. I think so. There's kind of two parts of this. So one is, will they still have a business model? I think the answer is of course. Like there's plenty of stablecoin expansion. There's plenty of active ways to produce rewards on stablecoin balances. It's just like the free money party is kind of ending, which like as a compromise to get broader clarity done, I think is fine. Like this, we always knew that there was going to be kind of an ugly compromise. We've talked previously on the show about also Brooks and Tillis knowing that like nobody is necessarily going to be happy with the conclusion that they come to, but it would satisfy the banks and it would move this legislation forward. And so for Circle, I think they'll still have plenty of revenue opportunities. They still have a lot of stablecoin expansion to do, but the kind of like just give free money to people, which obviously as consumers we appreciate, but in the broader context, like somebody sort of had to eat this sandwich, and I think overall it's positive if this moves Clarity forward. Maybe it diminishes the revenue stream for Coinbase on Circle passive yield specifically. But to me, this is not like the death of Circle. Like this is not that. It's not a big deal, but it's not that big of a deal, from my perspective.
Right. And
I
I think
also feel like, yeah, just markets in general, like they react to the news very heavily, but in the long term, you kind of zoom out and realize that maybe this was a blip. Not financial advice though.
yeah. And
NFA.
Citigroup and Bernstein agree with you, Gerald. Citi said that it's more of a short-term headwind than a real threat to Circle's business. And Bernstein said pretty much the same thing. So the Wall Street analysts agree with your take, Gerald.
Good to know. If I ever need another career option in life, I'll
There
maybe
you
just
go.
go start writing stable reports. Yeah.
All right, let's quickly get to the last story because I know we do want to get to Taylor. Tokenization announcements were really sort of I think the theme of the week, or at least maybe not just tokenization, but just announcements in general. I feel like at DAS, right? And I think Andy from the Roll Up had a great tweet summarizing just some of the news that we saw come out of DAS this week.
Yeah.
So there you go. Jacqueline, you want to point out
foreign
some of the
correspondent Andy? Yeah, Andy's a friend of our show, so shout out to him for this. I mean, like it felt like on Tuesday there were so many different announcements. There was like Franklin Templeton and an Ondo, Securitize and New York Stock Exchange, Invesco and Superstate. I think that was on Wednesday. But it was just like so many things were coming out. And I get it. Like at conferences, you want to announce things. It's good to get it out on stage. But I think it speaks to a bigger theme here. And we'll talk about this with Alex from Matter Labs of like, banks and crypto, digital assets converging together and really kind of like holding hands now and shaking instead of like, coming at odds, which is refreshing, honestly. So
Yeah, the shrinking gap, right, between TradFi
Yeah.
and DeFi, which is what the title of our show is today.
there we
Yeah,
go.
I was talking to one of our guys internally the other day. Shout out Simran, so the former head of trading at GSR, is now running a project for us called Monaco, and his take, which I'll steal, is it's just Fi. It's just there's no TradFi, there's no DeFi. It's just finance,
Fi.
and I think we're combining a lot of these initiatives. Like we've been saying, tokenize everything forever. Assets are coming on chain. The banks are here. I think they are comfortable with the amount of regulatory certainty around these asset classes, which is obviously new and something that's been very productive, I think, for the industry over the last year. And so, yeah, there's like an enormous untapped market of assets to be brought on chain. I think there's going to be a lot of winners here. It's not necessarily it's not just Superstate. It's not just Ondo, right? It's like the pie is big enough for everybody to kind of eat here. And so I'm excited to see, all these integrations and see all this come on chain.
Yeah, great segue, because talking of regulatory certainty, the SEC's landmark guidance on how securities laws apply to crypto has been a welcome step for an industry that's been asking for clarity for years and years now. But some critics say it still leaves some key legal questions unresolved. So to join us now to talk about some of those is Taylor Lindman. He's the chief counsel at the SEC's Crypto Task Force. Taylor, welcome to Crypto in America.
Oh, thanks for having me. This is very exciting. I'm a longtime listener, so glad to be here.
We're excited to have you.
Yes, welcome
Good
on.
to see you, man. You look good. You look good in a suit, man. You're a regulator now. I love it.
I know the suits I'm steadily getting more and more comfortable in them, but yeah, it's a thing.
No
Yeah.
hoodies, yeah.
How are your first couple weeks going? Maybe Taylor, we start there. Transitioning from crypto GC to now regulator GC.
It's a bit of a dream come true. This is all of the questions and issues that I've been grappling with for a decade of practice and thinking about in this space, and now having an opportunity to weigh in on them has been really gratifying. Before I begin, I also have to make my standard disclosure. These are my own personal views. They don't reflect the views of the commissioner or the staff. It's been a whirlwind, but it's been really, really rewarding already.
That's great to hear. Well, let's just jump in here, because we were lucky enough, and we were really excited to have Chairman Paul Atkins on the podcast with us this week, and he was gracious enough to answer some of our questions around this. And we're hoping to do a little bit more of a deeper dive into some of this interpretive guidance with you. And so my first question is this notion that an investment contract can sort of attach itself to a crypto asset in a way that brings this secondary market trading under securities laws. And some securities lawyers who have read through the guidance and kind of think about how they've been trying to interpret securities laws as they pertain to crypto assets, through the prior administration, through this administration, really over the last number of years. I think they call it the embodiment theory, but correct me if I'm wrong. Is that how the SEC is thinking about this these days?
Great question, and I'm glad to jump right into this. Before I get into that question, I do want to just set the table just a little bit on what the interp was designed to do. The interp is the SEC and really the commission speaking for the first time and providing our views on how the investment contract test works from our perspective. And with that comes the inherent limitations of what the investment contract test is. It's a subjective test. It's primarily designed to be used to apply against facts that have already occurred, like say in a courtroom, for instance. And so there are inherent challenges with the application of it because of its flexibility and its subjectivity prospectively when you're looking out towards some future conduct. And this question that you raise is exactly the type of question that we expect to hear from practitioners and commenters and to build a comment file on for purposes of the next steps in this process. But to answer your question a little bit more specifically, the idea of the embodiment theory, I think, is often thought of as kind of a shorthand for the idea of this investment contract continuing and persisting out into the secondary market. And as the interp kind of lays out, the focus there is really with respect to the unfulfilled promises that have been made, those representations, those explicit promises that are made at the time of issuance. To the extent that those promises are continuing forward unfulfilled or unabandoned, then there's the possibility that investment contract continues even in the secondary market. And I think that's the point that some commentators have pointed out creates some ambiguity for them in terms of how it works in practice. I'll pause there.
So Taylor, if that investment contract can quote unquote separate from the token, how are investors of the market supposed to know when that happens? Is there like a clear test or something involved?
So it is, again, one of the challenges of Howey is that subjectivity. So it's also facts and circumstances bound. And I think one of the benefits that we have now, having gotten the interpretation out, is to get that feedback from industry, but also to take the next steps, which are notice and comment rulemaking, which the chairman has already spoken briefly about some exemptions that will be available for offering, as well as the safe harbor that should hopefully provide the market with much brighter lines regarding when those offerings end, as well as a safe harbor to give the market some better certainty about when that investment contract may end. And so both of those pieces, sorry, go ahead. I don't want to dominate here.
No, go ahead.
No, that's essentially what I was going to say.
Yeah. So what I'm curious about, as obviously someone who's like dealing with this on sort of like a practical day-to-day basis, I think like we're super excited to see the guidance come out. I think like directionally we're all aligned. This is incredibly positive for the industry. Is there any sort of thoughts that you may have on what promises? So like if I'm looking at promises being fulfilled as like launching a network, right? And then I go out and publish a roadmap that may have some like future state not obligations, but maybe some expectations that I've set in the market. And as you mentioned, like this is going to go through rulemaking. Like I'm sure there will be issues that end up getting litigated. But if let's say if that initial investment contract ends between me and the primary purchasers of that asset, as a project, how should I think about future announcements that I may make that may set up additional obligations in the marketplace?
Yep. No, this is a great question, and we've received this question a few times. I think the best way to think about it is, again, to remember that this investment contract test, is a transaction-based test. So you have to be applying those facts and circumstances to each of these transactions, and that can be hard to do for the market. But what it really means, like just to use your fact pattern there, is if that investment contract is ended and you just now have a digital commodity, then the question turns on: is there another offer and sale that's subject to the investment contract prongs? And if there is, then are each of those the elements of the prong satisfied? There's been some investment of money, there's been a common enterprise, and then importantly, that those promises that are being made by the issuer, say that new roadmap, are those still the undeniably significant efforts that are being put forward, such that there's an expectation of profits driven by those? Are those really the managerial efforts that matter? And I think what you may see is that for networks that are much more functional or developed, where there are many people contributing efforts, building applications, transacting, et cetera, that effort may no longer be that central effort that is so important for driving that expectation of profits.
Mm-hmm. When we talk about the secondary market, Taylor, with exchanges and participants potentially having to deal with, we talk about statements and promises that they may not have made if it was the projects that made it in, say, the early days. Kind of how are they supposed to kind of manage that risk in practice? Is it all, like you said, facts and circumstances, case by case basis?
So this is where I think like the limits of Howey really show, and like the limits of the investment contract are really shown, which is to say, like, is this the best tool available for helping the market have clarity, so to speak? And I think this is just one of those tools. And the other one that is, I'd be remiss not to say, is the Clarity Act itself, which could provide that level of certainty The exemptive pathways that are being considered here as part of that notice and comment rule making, those will help with regard to prospective offers and sales. They will give some structure around those sales, similar to like Reg D and others, that will give the market a level of understanding for new projects. But it doesn't necessarily help the exchanges and other intermediaries assess all the tens of thousands of tokens, and that's something that Clarity likely will be able to do.
So Taylor, I think we've talked about this a little bit in the past, and I know Chair Atkins has been very enthusiastic about providing optionality and clarity for new projects, like you said, but also just for innovative financing, fundraising models with exemptive relief and with hopefully clarity on the table. Do you think there will be more tokens or more projects who potentially choose a path that is actually ends up being net beneficial for the holders of those instruments? Because I feel like one of the things that I've discussed with people in the past is that this idea that there's just a governance and utility token and that's all it can do is actually partially a product of the regulatory environment under Gensler. It's that you intentionally could not do anything interesting with that asset because you were inherently limited by the regulatory environment, right? If I don't want to be a security, then all I can do is utility and governance. Do you think that there are more options for digital assets to be more security-like or to adapt other features that may have been blocked by some of the interpretations that we saw in the past?
No, this is a great question. And I think this pushes against, some of the stigma that exists with tokens that start to have features that are securities. And I think to the extent that a token is a security for, there should be good reasons for those tokens to go in that direction and have a robust market that they can participate in. And similarly for digital commodities that are, have innovative features, those features shouldn't necessarily run afoul of the securities laws. In part, I think the interpretation helps with some of these features being clarified through the representations that are being made, such that it's not just about decentralization or functionality, but more about, are those promises fulfilled or have they been abandoned, such that, that expectation of profits is dissipated. That should open the design space in terms of not trying to restrict towards specific types of activity like governance, et cetera. And then similarly, there should be an uptake on the security side of the market, which is to say it shouldn't no longer be a scarlet letter to have a security token. There should be liquid markets. They should be able to be assimilated into our existing security markets, with rules that of the road that allow for these things to find capital formation and grow. And so I think the combination of those two things, bringing those worlds together, harmonizing, that all is going to help drive more innovation and more unique use cases for tokens.
Mm-hmm. Taylor, this might be a loaded question, but I heard you say the limits of Howey. Do you think the Howey test is still the right framework for evaluating crypto?
It's the framework we have. So this is digital commodities. I think that's the most diplomatic answer. And for these digital commodities that are, not fitting within any other clean definition under the securities laws, this investment contract question has remained unresolved and is still an important touch point, especially for fundraising and capital raising events.
So what should the industry
new tools? And that would be another exciting way in which either the CFTC or SEC starts to manage these assets.
Yeah. Taylor, what would you say is the next steps that the industry should be looking out for or waiting on from your side then?
So like I said, I think the big pieces of the rulemaking agenda are on the way, and that's exciting. And that should hopefully help continue to push this question forward and clarify this question, at least from the SEC's side. And then there will also be a lot of motion on the traditional securities side, bringing these two markets together, especially as it relates to tokenized securities. And so those are the things I'm most excited about. They're the things that's the serious work that has to happen over the next year in order for these markets to really achieve what they're capable of.
Awesome. Taylor, thanks for coming on and breaking it down. Oh, Gerald, do you want to go?
I have one more for you, Taylor. Who's a better boss, Paul Atkins or Ben Sherwin?
Oh, that's a devastating question.
I'm glad Gerald got to slip that one in.
I'm sure
Yeah.
they're both.
Gentlemen.
I'm sure they're both incredibly. I'm sure they're both incredibly great people to work for. But yeah, excited for you.
Thank you.
Thanks, Taylor.
Thanks all.
Thanks for coming on.
Gerald, that was harder than my question. Jeez.
Gerald, we want these guests to come back.
Oh,
We
come
can't
on,
be
that's an
doing
easy
stuff
one.
like
That's
that.
an easy one.
Yeah. You
Oh,
let us know
man.
when you work for them too, Gerald.
Yeah. I'm about to get an angry text from the SEC. Like, alrighty. Well, banks are starting to experiment with tokenized deposits, as we know, because TradFi and DeFi are converging. But it's just another way to bring money on chain. And companies like BitCo and Matter Labs are building the infrastructure to make it happen. So joining us now to break this down and tell us about a new partnership in order to make this happen is co-founder and CEO of Matter Labs and the co-inventor of ZK Sync, Alex Gluchowski.
Welcome on, Alex.
Morning.
How are you?
Hi,
Welcome.
Alex.
Good to
Thank
see
you.
you.
Excited to be here.
Yeah.
Alex,
How
is
you
it
doing?
is it Gluchowski or Gluchowski?
It's Gluchowski.
Gluchowski. All right.
There we
Good.
go.
I'm glad I asked you. Well, welcome to the show.
Yeah, and you just announced that you are working with BitGo to help banks bring deposits on chain. Compared to stablecoin, CDs are still fairly new in the adoption phase, right? So what are you hearing from financial institutions about what they need to feel comfortable to do this? And I know last week when we spoke on stage at DC Blockchain Summit, we also talked about Carry Network doing this too. So you guys got 2 announcements, 2 weeks, and they're both on tokenized deposits through banks.
Yes, so the banks are obviously on the same wave of innovation. They see the progress that's happening in the crypto world, and they are now unblocked by the regulatory enablements. And they understand that this is the future. They have to embrace tokenization, and they have to connect to the global markets in a much faster way than, in a much more modern way than the technologies that they're currently using. Many banks are still stuck largely in the infrastructure that was built in 1970s. Many of them still run COBOL. So they are jumping from this old era directly into the world of stablecoins and instant settlement, 24/7 markets. And they have a much more conservative stance compared to the other players in the crypto world with regard to what they can and cannot do. And the requirements from the banking side are, frankly, which was surprising to me, are a lot stricter, and they are doing a lot deeper technical diligence on how the systems actually work. What are the underlying trust assumptions? How is privacy actually preserved? Is it they're not comfortable with claims and with promises. They need to see the proof. And this is what we bring them with Prevediums and zero knowledge proofs. So maybe we're happy to unpack the both announcements, the Carry Network and BitGo, what we're doing there exactly. Carry Network has been founded by the amazing Jim Ludwig, who was a former controller of the currency, which is the highest regulatory body in the US for banks. So he's he's a legend in the banking world. He understands the requirements and the whole industry very, very deeply. And it's the first time where 5 banks together are coming in the first step to bring tokenized deposits and have interoperability between them. The efforts we've seen earlier were a single bank doing this for their own tokenized deposits. And multiple banks is what creates the network. When you have a single bank, it's not very far from just being the customer of this bank. But when multiple banks come together, this is where the network starts forming, and you really have the interoperability and 24/7 going beyond a single institution. So for everyone who's watching, tokenized deposits are very similar technologically to stablecoins. You can think of them as stablecoins issued by a bank. The difference is how they are treated legally. A tokenized deposit is treated the exact same way as a normal deposit. So it has the FDIC insurance, it has all of the properties of a normal deposit with regard on how it can be managed by the bank. And it stays in the infrastructure, in the security perimeter and the AML perimeter controlled by the bank. but it can go beyond if multiple banks join the network. And because it's the same technology as the stable coins, you can also interoperate further. It's the bridgehead which enables the banks to extend to
Right. Alex, if
further.
they're so similar, do you see tokenized deposits maybe taking on a larger role than stable coins in the bank world, at least? Do you think banks will lean into tokenized deposits more than stable coins in the future?
I think it's a lot easier for banks to start with tokenized deposits. So the requirements they have are they need to preserve privacy. They are obliged by regulation and legislation to keep the transaction data of the users private, their accounts private. And today on the public chains, this is not really possible. And specifically for deposits, displaying inflows and outflows of a bank has been flagged by regulators as a systemic risk for the banking system because it could provoke bank runs. So privacy is one. Two, they need to preserve full control over their part of the infrastructure. Many banks would not be comfortable today of going on the public chains, even if those provided privacy, because they have internal forces. As I said, they are very conservative. So it's still harder to convince a banking compliance and risk department to embrace blockchain technologies. What we offer them with Previdium really satisfies all of the checks. Like the Previdium is really loved by compliance and risk people because it works internally very similar to an internal banking system, with the difference that you have the connection to the global crypto world.
Alex,
and yes,
I was going to ask, what is compelling like smaller regional banks in the US to step into this? Because a lot of times in these headlines, not necessarily in this instance, but like across the board, it's always like really big banks. But right now it's regional banks, right? Which is interesting.
I was also surprised that the regional banks would move faster. And the reason for this is they need connectivity. They need to come together. They need alliances more than large players. And they want better rails for a settlement between the banks. Their customers have demands for 24/7. They understand that they have to innovate, and the early adopters of these technologies will have a say in how the design of these protocols is shaped. And if they wait for the large players to set the terms of and the rules of the game, they will eventually pay the costs, and all of the benefits will accrue to the early large adopters. And I think they realize that. And the large role in that is played by the visionary leadership of Gene and the Carry Network, who managed to build this coalition. And I know that they have a lot more banks in the pipeline willing to join the network, and we'll see this announcement very soon.
Yeah, Alex, I know this is a huge design space, and there's a lot of room to grow and do innovative things here. For our viewers, how would you compare something like what you guys are doing to the Canton network, which I think got a lot of maybe fanfare and initial traction on being one of these institutionally suitable sort of options? How do you guys think about that comparison?
That's a great question. We hear this question a lot, and frankly, I would not categorize Canton as a blockchain. They are more like a distributed database interoperability protocol, where most of the relations are managed contractually. So they do use technology for enforcing certain rules, but the privacy guarantees are essentially contractual, unless you only have a bilateral agreement between the two parties. What we offer with Previdiums is the way to access public permissionless blockchains on the terms of the institutions that are joining them. So we give them this truly hybrid solution where they have their private space connected to Ethereum, and from Ethereum to every other blockchain with interoperability protocols, and to the public markets on Ethereum, and privacy secured by cryptography rather than these contractual obligations. So we have zero knowledge proofs offer you a layer of integrity on top of their existing banking systems. So they have all of the security enforcement of traditional InfoSec providers that they use, but they have this layer of incorruptibility, the mathematical integrity guarantees on top, which makes this really work like a blockchain system with atomic settlement between different banks and with connection to the global markets.
Alex, you said this is already being tested. So what needs to happen for this to move into full-scale production, for this to really kick off?
It's just a matter of implementation. The work is underway, and we will see the first it's going to go live in due time as we roll out the technology. But we have a tight roadmap. Carrie has more partners to onboard, and at this point it's just a matter of engineering. The regulatory clarity has been provided, and business decisions have been made. And this has significantly impacted the quality of the inbound that we are now getting from other participants now. Like I'm here in New York at the DAS this week. We had a lot of conversations with banks who finally see a path for them to embrace these technologies in a regulated, compliant way, which was not possible before. This is very encouraging.
Great. Well, congrats on the move, and thank you for joining us, Alex.
Yeah, thanks, Alex.
Thank you.
Thanks, Alex.
All right. Very interesting. I feel like even though clarity hasn't passed yet, like there's so much stuff going on, and there's just enough there, right, that is allowing partnerships like this and innovations to just go.
So imagine like once it does pass, optimistically does pass,
Yeah.
what
That
it'll
could be
actually
awesome.
unlock. Yeah, I'm being optimistic today.
It's going to be interesting.
To
Yeah.
wrap up the hour, I think we're probably going to cover some clarity with Mason, who is joining us to talk about some midterms, some campaign finance. Mason Lynaugh, he is the executive director of Stand with Crypto. Welcome to the show.
Hey guys, good to see you. Happy Friday.
Happy
Happy
Friday.
to see you.
Friday. I say
Yeah.
welcome back, because I think we haven't had you on the Friday
Since
show,
we
but
did our stand-in
we did a little partnership with you guys, right? We did the live stream
Correct.
a couple months ago.
This is the first time as I think, a formal guest on Crypto in
Yeah.
America. Last time we did our day-long Crypto Day of Action live stream, which was amazing to have you guys participate in. It was a huge success. I think there's like 13,000 lawmaker contacts on that day for market structure.
Mm-hmm. Yeah. That feels like a long time ago now. And market structure still hasn't passed yet.
Kicking down the
Mason.
street. Yeah.
You know, good things take time.
Yes,
Yes.
it's true. Well, speaking of good things, Stand with Crypto has played a big role in helping get pro-crypto candidates elected to Congress. You guys played a big role in 2024. You now just launched a new initiative for 2026. Tell us what's going on. What's different about this strategy, this new one that you just launched for the midterms compared to 24?
Yeah, happy to share, and appreciate having you the time to break down the electoral strategy we're laying out here. So I like to tell a story of multiple years, right? Stand with Crypto is relatively new in the grand scheme of things. 2024 was very much about the crypto voter and getting the entire crypto community to engage in the electoral process for the first time as a constituency. In 2025, we saw the power of activating all of these newly civically engaged individuals in pushing for legislation, and we saw great success, obviously. Last year, we broke 1.5 million contact mark, I believe. That might have been the beginning of this year, but still great numbers for a relatively new voting block, but a voting block that is very important nonetheless. And when we go into 2026, we see this very much as an accountability moment for the lawmakers that have taken action this year, showing up for champions, but also holding folks accountable that didn't necessarily represent their constituents as it pertains to crypto. So if you look at it like a 2024 broad crypto voter mobilization, 2026 is about where in these tight races across the country can the Stand with Crypto advocates specifically make a material impact on the composition of a pro-crypto Congress. So we've selected 6 races here that are going to be extremely tight and extremely pivotal in determining the future of the House. And we think that our numbers, specifically in these districts, whether it be 3,000, 5,000, 10,000 advocates in some of these, have the potential to swing that election one way or the other. And it's going to be a very exciting moment to really flip the switch and turn these advocates into get out the vote engines.
Mason, I know that single issue crypto voting was a big, big narrative in 2024. And I mean, so many people I spoke to were literally like, I'm just voting on this, right? And we see this, with a lot of different themes. And for a lot of people in the space, like crypto is their livelihood, it's everything to them. And then I think the data supporting it wasn't necessarily massive at the time, though, but it was very anecdotal. So now nearly like half of crypto voters you polled said they would support a candidate based on crypto alone. Are these single issue voters really kind of going down this kind of path and becoming a real voting bloc themselves?
Absolutely. And I want to point to, I think, the almost 50% of crypto voters saying that they would be single issue is huge in itself. But I would also look retroactively and see that 77% of crypto voters don't vote for a single party. So there's two different angles there, right? There's I'm a single issue crypto voter, but then there's like I'm a flexible voter. I am persuadable. And my vote is something that can be won whether or not you're a crypto champion. So the voting block is very real, I think. And this is more on the anecdotal thing. And it's a shout out to Justin Slaughter. He did a post like last year at some point in time that he had his own analysis of like how much the electorate moved based on crypto. And I found it very compelling. But our polling here does really indicate that this is a swing voting block that is very much something people should pay attention to. I think we are making that case broadly in 2024, like the crypto vote is real, pay attention to us. But this year is very much like, are you going to win our votes? Because we're here and we are going to vote. And it's 80% of Stanford crypto advocates that have expressed in the polling that they are enthusiastic about a midterm election, which is quite remarkable when you think about the drop off between a presidential and a midterm year.
Yeah, Mason, I want to follow up on that sort of nonpartisan or swing aspect. I think one of the most probably powerful tools that Stand with Crypto has put together is this report card, which is obviously like nonpartisan, very credibly neutral in terms of evaluating a candidate's participation in these policy issues. Do you think that there's an opportunity in the midterms to bring more policymakers kind of under the umbrella of being pro crypto, or at least understanding how their positions are affecting these voting blocks, like as opposed to being viewed as like a purely sort of bipartisan issue?
We have a questionnaire, right? So we have our scoring system that takes into account statements and actions, but we also have a questionnaire. So if you're a candidate, challenger, or a lawmaker that feels like you're not necessarily getting your crypto stance fully recognized, you can submit a questionnaire and go on the record and say, where do you stand on things like exempting DeFi developers from financial regulation, it going on there and saying, do I believe in stablecoin rewards? It's about 11 questions that are all pretty robust. So if you want to go on the record, we will score you. But these numbers, these grades are exactly what crypto voters use to analyze and assess who is worth their support.
I will say, Mason, I think Adam Schiff has an A, although I think he voted against the ag markup a couple months ago.
Well, he's logged his statement. His ag vote is logged, but his floor votes are also logged, right? So obviously, legislation is a bit of a messy process, and people are working through things in real time. But the Genius Act was a great success, and we appreciate all lawmakers that supported that.
Yeah, I'm looking through it now. I guess there's some green, there's some red here. No, and you guys also launched a voter hub as well. So tell us how that differs from the politician scorecard. Is this sort of this is an updated version of that? Just another way for voters to be able to check how well their potential candidates are doing?
Yeah, the scorecard is very much more of like, hey, let's check out like what does this sitting senator and this sitting congressperson say? What's their score? The voter hub is meant to be a place where I go and I can put in my state, I can see the races, I can click district by district, or if there's a Senate race, I can click in there. I can see specific races that have been highlighted that could potentially have an outsized impact on the outcome of what a pro crypto Congress could look like. And then on this homepage here, we have 8 races that we've featured, 6 of which we've made endorsements in, and 2 of which are targets to flip an anti-crypto lawmaker to a pro-crypto challenger. So we're going to be doing more updates over time and making more statements. But we wanted to get this out the door as people are starting to think about the rest of the year, right? Like, we're obviously working through market structure, and that's going to be a big decision point for a lot of folks. And speaking on behalf of the community, everyone that got involved in Stand with Crypto got involved fighting for market structure and associated laws. So it's good to remind people, hey, the voters are watching, but also give the voters the tool for them to prepare themselves, or remind them at least, like, do you like what's going on? Do you have expectations for your representative? By the way, you have a chance to make a statement in November.
Yeah. Mason, there's also opposing of some candidates. It kind of reminds me of like the naughty list for Santa, but what does someone have to do to end up on the opposition list? Like, how bad do they have to be? And then are there any anti-crypto candidates out there today, maybe aside from Senator Elizabeth Warren? I would probably guess she's on that list.
There are a good amount, I would say, of lawmakers who are, let's say, they don't have passing grades on the scorecard. And primarily the reason behind that in a lot of ways can be their record when it comes to critical legislation. There are obviously a lot of lawmakers that make it a personal point or a political point to oppose crypto, just broadly, ideologically, whatever you want to do. But a lot of these lawmakers also speak with their actions. And, so when you see an opportunity in a tight race where Stand with Crypto advocates have a great amount of people there and are motivated to vote, and you could take a F and put in an A, that is something that really makes a long-term impact on the potential for future opportunities for the community to see outcomes legislatively that they really need for their livelihood, their futures, and then what they believe in.
Tell us
Mason,
about, sorry.
Sorry, no, I was just going to say we've talked a little bit in the past about how important it would be to have candidates kind of on the record on clarity if we actually can have a vote prior to the midterms. How does that factor into the way you guys are thinking about this strategy? Like, if we actually have floor votes on clarity, there's an opportunity, obviously, for legislators to be supportive and, improve their grade or move the industry forward. And then, of course, there's also in the absence of a vote, the opportunity to be more ambiguous about positions on like those policies. And I apologize if I'm breaking up, but if you caught all that, like, how do you think about how important a vote on clarity would be to informing decisions going into November?
I would say very important. Votes are the most important thing that a lawmaker, passing laws is the most important thing that a lawmaker can do when it comes to this type of subject. And there's opportunity for lawmakers to right the ship, so to speak, and there's opportunities for lawmakers to drop the ball. And I very much hope that we have the moment to not only get this legislation done for the sake of the community, but also have that moment to, create a decision point for lawmakers as to where they stand and whether they want to be part of this massive community. Because I think there it goes. I don't think you guys or like the crypto community forgets this, but when you see headlines about political spending or political drama, lost in the story often is the fact that there are millions and millions of Americans that care about this stuff, and they rely on it. They, wake up, they check their prices, they believe in their technology, they have their own communities, DAOs, NFTs, whatever, what have you. They watch shows like Crypto in America every day. They get on Twitter. This is what they care about, right? It's not just a niche thing. And our job as an organization and a community is to always channel that collective will. So any type of moment where lawmakers can decide whether or not they want to stand with us is going to be very important for Stand with Crypto, for the community, and then also for the lawmakers' future.
Just quickly, Mason, I think, some, skeptics of crypto or skeptics of the crypto voter would say that most people care more about economy and inflation, right? But what would you say makes you confident that crypto can be a deciding factor in some of these swing races?
I mean, voters have all types of priorities, but the polling indicates, right, if you have a outsized, enthusiasm gap for specifically crypto voters, right? You have people that are single issue that will change their opinions about a politician. There's it's 64, 65% of voters that are enthusiastic to vote for candidates that support the industry. All of these numbers, I think, paint a pretty clear picture that even if I'm a voter that cares about other things as well, this issue could be the issue for me. And you don't have to, in these races, right? Some of these are gonna be so tight, right? Looking back at 2024, even in some of these tight districts, it's like 500 votes that determine the outcome, 1,000 votes. And if you have a base of 5,000 standard crypto advocates, and you've got an active standard crypto chapter, and you've got a robust electoral program with traditional tactics like digital campaigns, mail, door knocks, et cetera, that number of 500, 1,000, 1,500 could be determined specifically by that group of standard crypto advocates. And we don't have to boil the ocean. We just have to show up and make sure that the voters that care enough to go to standardcrypto.org, put in their information, call their lawmaker, those people, I think those people are going to vote for crypto.
Well, we've got a couple months left till the election, so I'm sure we'll be hearing more from you guys.
Yeah.
Definitely. And let's cross our fingers. I trust everyone that's working on market structure to get us there. Let's make it happen. And then everyone, let's focus on winning these elections. The community, we got to stand together.
Yeah.
Let's do it. Yeah.
Stand with crypto.
Right.
Mason, thank you so much.
Thanks for having me. Happy Friday, y'all.
Happy Friday.
Thanks, Mason. Good to see you.
Bye.
All right, y'all. Happy Friday to you guys too.
Yeah.
Great show today. And
Yeah.
what's next week? I was gonna say.
Some people are going to HCC. I think
HCC?
all of us have opted out.
Yeah.
I think so.
We're
Yeah.
not traveling next week though, are we?
No.
We're all-
Nope.
okay.
For once, we
Yeah.
are not traveling. We are staying put.
Awesome.
Yeah.
All right.
We'll see
my
how
breath.
my TSA experience goes later today. We're gonna
God.
test that out.
luck.
Good luck to everybody
I'm
traveling home
surprised
from
you didn't leave
Dallas.
yet. Yeah.
Yeah. Yeah.
Well, they
We'll
funded.
see
I
how it
think they
goes.
came up with a spending package this morning, right?
I hope so. I hope so.
think I saw that
we
headline
will find
cross, so
out. Yeah.
Maybe
Yeah.
by the time we start traveling again, we won't have as many issues.
Yeah.
Yeah.
Fingers crossed. All right, guys.
All right.
See you next week.
Thanks.
All right. Happy Friday.
Happy Friday.